So hello guys, welcome back to the channel. So today we're gonna start with what is today first of all? Today is Saturday and this is March 1, 2025. Okay. So firstly we're gonna have a look at the video which we recorded on I think on Friday maybe. Just open it up for you. And this was the previous trade which I shared. And if you look at this, I was looking at this support area over here. This is forex.com chart. I've switched to FXCM chart. I'll explain you the reasons. No reasons, by the way. It's just that all the brokers were having similar kind of charts on the charts which are similar to the FXCM, and the forex.com charts were different. So I wanted to stay with something which was really like present on each and every broker. So forex.com, I cancelled it out and I switched to FXCM. And later on, would have added a position over here as well. Show that to you. This was my position on forex.com chart. Open it up for you on the forex.com. So this was a position, right? I shared it on, I think on maybe on Friday last, not maybe on Friday, maybe where was it? Around this daily candle. So this was on Tuesday. I shared this video on Tuesday and today is Saturday, Wednesday, Thursday, Friday. So entry happened yesterday. So I didn't upload a video. And you see at this, we have got a good reaction from over here. And we possibly want to trade higher from over here. So first of all, let's look at the FXCM chart. This is where I'm interested in. And this was a simple short trade over here. I was looking at this and on the 4-hour chart, I had some liquidity, or on the hourly chart, we had some liquidity developed over here. And we tapped it around the 2 o'clock, which is the London low of the day. If you look at this, explain everything to you, okay? Don't worry. So I took an entry over here. I directly took an entry because I was seeing some reaction from this liquidity hunt above, hunt below, and we had some draw over here as well. If you look at this, these are some clean relative equal highs. So this is going to be a good draw for us. If you look at this is going to act as a magnet. Once one side liquidity is taken, then other side liquidity will be taken, right? So this is going to act as a magnet for us. So when we dropped it into the 2 o'clock hour over here, you look at this huge candle downside. That is manipulation for us. And this whole thing is accumulation for us. And this was manipulation. And that was distribution. This was actually the distribution. Okay. You look at this. This is New York time. Okay. I'll just hide the position now. I got it right. So delete everything out. So I'll explain the trade to you, and the trade will hit TP around, I would say, today is what? Today is March 1st, right? So obviously, so we're gonna be trading March 3, March 4, March 5, March 6, right? So there are gonna be some news, but obviously the 830 hour influences the price. I don't trade this asset, but I can trade anything I want according to the price action. Okay. So this was 930. This was 830. Okay. You see, we got some reactions over here. So we have kind of done a market structure break over here. Low, high, lower low, and higher high. That's a break in market structure, right? Break off. We didn't form above it, but we went lower till where? Lower to take out this New York liquidity over here and forming a inducement. That's a very strong entry pattern. We have some uptrend over We have decided that we're going to move higher, and then we have this liquidity hunt over here, and we are trading into this imbalance. And if you look at this Fibonacci retracement, so we had a deep retracement, 0.79 level. We had a very deep retracement, and then we started moving higher, right? After this liquidity hunt, we started moving higher. And what I see right now is we're going to be moving aggressively towards this high. And on the Monday, we're going to be extremely bullish, okay? We're going to be extremely bullish. I'm not seeing any chances that the price is going to consolidate. It can, but obviously what I'm seeing is it's going to move higher. So this is going to be the TP for us. We can keep it over here, over here, over here. But what I'm considering is I'm very close to passing a challenge right now. So I will exit it over here. Okay. And then we'll move later on. So I think I shared 2 or 3 trades on this account, maybe three, right? Yeah, maybe three. So all of three of them have been working good. Look at this dollar, not dollar. Another setup over here, which I shared to you, was this one. And another setup I shared to you was, I think, this one, right? And we wanted to take out this high. This was one setup which I shared. This was another setup which I shared. So there were two setups which I shared right now, and this is the third setup as far as I remember. Out of three, I have taken two. The second gold trade I didn't take because I was not present on my screens. So basically, I don't have a model right now. I have a model, but it is basically understanding of the institutional order flow on different time frames. So if you can look at this, I was trading this 4 hour chart, not the 4 hour chart. I was looking at this chart over here. I was really sure that we're going to take out this low and we're going to tap into this daily fair value gap, the daily fair value gap as in higher time frame PD array. And then we're going to take out this low over here and then take out this high. So it was very easy for me, this trade as well and this trade as well. You could have easily entered over here. You can have a look at the tap into the fair value gap. It's it's perfect, it's perfect. If you look at this, the London close has a deep retracement. The London low is protected. 70% of the time, the London low is protected, right? So we're gonna move on to the high. What is it? 0.79 Fibonacci retracement level. We tapped in into this after London, after New York, just a bit after New York. Okay, just a bit after New York, and we took out this high over here, and then later on, if we extend it out, Asia went again lower, but the London low was protected, okay? But the London low was protected. The low was protected over here. The order block supported, the demand zone supported price with the fair value gap or the imbalance, whatever you want to say, you can say it. And we had some liquidity over here. If you can look at this liquidity was the drop. Another day, if you look at this, let's move on to the higher time frames. What happened? Just a second. What happened over here is we wanted to take out this high, right? Let's turn to the hourly chart. 4 hours really. You can look at this. We took out some liquidity. Again, that's the same thing. We took out the hourly liquidity over here. After London, we took out the low. We found some liquidity over here. And then we moved higher. Higher into what? Higher into this high. And a very simple trade, the second stage distribution can be over here. I'll share it with you as well. I got a lot of models which ICT uses. Okay. Where is it? Okay. You can add on to your positions over here. Once the low was confirmed that we're going to move higher after this high, taking out this high, and we were really bullish and we wanted to take out this high, right? So we formed an order block over here. Once we close above it, we made sure that we're going to cap into this and we're going to move higher. Again, an order block. This is a propulsion block, if you know it. This thing, body of the candle is going to be protected anyhow. And if you look at this, the body and the open of the candle is really sensitive. Open and the high. So this is how we went higher. And the moment we went higher after that, we went lower. Lower into what? I'll show it to you. Anyhow, but we don't want to get into the reversals, right? We're trading in an uptrend, so we want to get into longs. So this was the trade. I shared it last week, I think. Around Friday, I shared it, I think. I don't remember. You can have a look at the videos. And this was the actual trade which I took. This was the trade which I shared, but which I didn't take actually. And then later on, this one, this is also a setup which I shared over here. I wanted to protect this low over here and move higher. And we actually did over here. Now this one, we want to move higher into this drawn liquidity. It's very obvious. You can have a look at this. This is very obvious for us. It's very easy right now. And I think it's going to work really fine. And the next few days, Saturday, Sunday is holiday, right? I don't know about FRA 240. I just trade the price action. It will be open in 2 days and 1 hour. Okay. 2 days and 1 hour. So there's a lot of time right now. 2 days and 1 hour. So it's still gonna take some time. So it's gonna open around Monday 12 p.m. Okay. Monday 12 p.m. it's gonna open. And we're gonna expect to hit the TP by Tuesday or Monday, maybe. Let's see. We don't know the time, but we know the price, right? So we'll focus on that. My stop loss is trailed below this low. So if I get out over here, it's not gonna be a big pain in the ass. So you get it down over here. If we get down over here, we're gonna exit. And if we get over here, we're gonna exit with take profit. Okay. Now you're gonna have multiple opportunities. You can form the London low, then move on to the New York high and take out this high and potentially this high as well. Because we have some liquidity over here, and liquidity is where the price is attracted to or is drawn to. And if you look at this, we were in a weekly fair value gap. That is really major for us. And we filled in the order, filled in the fair value gap properly, and then we started moving higher. And if you look at this, if you refine it down to the daily fair value gap, the daily or the weekly fair value gap, the body of the candle is supporting price. For just a minute, what I'll do is I'll just turn off the VIX. If you look at this, look at the body of the candle. It's supporting the fair value gap. We are not going below this imbalance. The body of the candle is supporting the price. The wicks do the damage. Remember, right? The wicks do the damage. And we're moving higher. So we want to take out this high. So we'll have a look at this. And I'm not looking at other pairs right now. Okay. This was one of the trade which I shared, I think. I don't remember if I did the analysis on the YouTube account or not. This was one of the trades which I shared and it hit TP around the last hour. This is huge consolidation over here. So huge number of orders are present. And obviously support turn resistance over here. Look at this. this has turned into what support, this has turned into resistance, and this whole thing, the one pause before breaking it down is this candle. So, and once we tapped into this, we moved lower. So I'll see you in the next video. Until then, good luck trading, and I think that's enough for this video. If I see some new setups, I'm gonna share it to you, and I'm calling it out live. Okay, I'm not doing it like I'm not calling it once it happens, and I'm posting a video 1 day or 2 days before the market opens or the market is trading. The trade is not yet open, so I'm doing it like that, so you have enough time to look at the videos. Okay, and don't trade like me. Understand the markets first and then trade accordingly. I'm not a financial advisor as well. I think I need to add some disclaimers as well. So I'll add that as well. So next we're gonna have a look at the Indian markets as well. But I'm not that much into Indian markets. So pardon me if I do something wrong. I'm more into gold, not gold, Forex, commodities, index, and other markets, the foreign markets, the US markets basically. And have a look at the European markets as well, the England markets, everything, you know. I keep a look at that every single time. So I'll see you in the next video. Until then, I think it's a long video. So I'll see you in the next video. Until then, good luck trading. Bye bye.